Onto your markets now. Asian markets broadly saw modest gains following the US markets finishing their best week of the year. However, of the markets that we track, Japan's Nikkei Composite and China's Shanghai Composite Index were closed on account of a holiday in those countries. Data over the weekend showed that China's economy slowed further in August, with factory output, retail sales and investment levels failing to meet with expectations, while the unemployment rate surged to a 6-month high. The Hang Seng Index was up and down during the day, but ultimately settled up at 0.31%, closing at 17,422 points. Over in the United States, stocks rose at the week's close. Market players awaiting the US Fed's next move on interest rates this Wednesday, with speculation continuing to rage about the extent of the Fed's rate cut after its previous rate hiking cycle. The Dow Jones Industrial Average rose by 0.72%. The S&P 500 ended the session up just over 0.5%, while the Nasdaq Composite Index closed up 0.65%. The rand is trading firmer at 17.65 against the US dollar, 23.30 vis-a-vis the British pound, and 19.62 against the euro. Looking at the commodities, gold is trading at $2,577 an ounce, platinum at $990 an ounce, while Brent crude oil is trading at just shy of $72 per barrel. Gary Boyson is a portfolio manager at Rand Swiss, and he joins us now. Very good afternoon, Gary. So can we expect more volatility on the US, ahead of the US Fed's decision on Wednesday, or is it just going to be just cautious trade ahead of that decision?
Well, I certainly think they're not mutually exclusive. So we might definitely see volatility picking up, but at the same time, you would expect markets to be a little bit more subdued. And as we can see today, some of the volume may be coming out from Asia, but over in Paris, markets flat. The FTSE also flat in the UK. The JSE All Share also flat. So it's a mixed bag underneath. You've got the resources up 0.2%. You've got the financials also up 0.2%, but you've got the industrials down 0.41%. So very, very mixed. You feel like the market is just drawing a deep breath and waiting for the first announcement of an interest rate cut in a long, long time.
Yeah. So a day after the US Fed makes its call, the spotlight will then be on the Reserve Bank. What are your expectations, and which local stocks do you think would be an immediate beneficiary of a rate cut?
Yeah, so it's interesting if you look at the probabilities of a US rate cut. So it's a big week. We're going to obviously have the MPC meeting on Wednesday, but then we have the announcement from the Fed on Wednesday evening. We also have CPI numbers out from South Africa in the afternoon of Wednesday. And then, of course, on Thursday, the South African Reserve Bank will announce its decision. So looking at the federal funds futures at the moment, it's actually tilted in favor of a 50 basis point cut, so a 0.5% cut. There's now a 60% chance that the Fed takes 0.5% out of their top line rate. We've still got pricing, that we expect to see in the next 3 meetings around 1.25% coming off US rates. The South African Reserve Bank, the probabilities are at the moment that we'll see a 25 basis point cut, so 1/4 of 1% coming off there. And it's difficult to say which stocks are going to rally on the back of this. I think what you are going to see, if it plays out as we expect, our base case is that we will see the rand continue to strengthen. And one of the reasons for that is if the US does take 0.5% off their headline rate, and we only take 25, our interest rates down by 25 basis points, the interest differential at least swings in favor of the South Africa, and it becomes relatively more attractive for investors to park cash in South Africa, and that should see a strengthening currency. In terms of the typical sectors that benefit from an interest rate cut, you would expect property stocks to do well. You'd expect consumer discretionary sectors to do well, the likes of the retailers. The problem is that markets are forward-looking, and if I look at, let's say, the South African property index, on a 1-year view, we're up around 50%. You look at something like Growthpoint, one of the heavyweights in the real estate, one of the big real estate investment trusts, up 44% over the last year. If you look across in the retail space, Mr. Price almost up 100% over the last 12 months, and ShopRite also doing a fairly steady 26% return. So I think a lot of the optimism around rate cuts in those sectors has maybe been priced in already. But of course, as the risk comes out of the market, we could see further gains as well.
Yeah, just to touch on the point that you made about the property stocks. I mean, they were very hard hit during COVID and they've had to recover. So one could argue that that's coming from a low base and that there would be more scope for growth, no?
Yeah, absolutely. So there's almost no question that there is base effects in our property sector, but at the same time you are seeing rental occupancies improving, and you are seeing, I think, easier conditions on the ground as well. So as to how much runway is potentially behind this, I mean that's a very, very difficult thing to predict. But what we do know is that as interest rates decline, and if you have money sitting in a bank account earning interest, suddenly a rental income becomes relatively more attractive. If you used to get 8% and you're suddenly getting 4%, suddenly having an investment in properties, it does become relatively more attractive. More people enter the market, that further boosts prices. So this really could be just the beginning. And as you said, some of those returns are base effects. I don't know, the retailers have been running for a little bit longer, but yeah, hopefully a lot more to come for South African property investors.
So a quick one, Gary, Sasol, they've had a hard time convincing some, sectors of the market that they're really good for transitioning to, a more carbon neutral type of existence. But it's interesting today that they appointed or announced the appointment of a lady called Muriel Dube. She's the chairperson at Sasol, effective from the 13th of this month. Interestingly, her skills are around environmental change, sustainability. She was also a lead negotiator for the South African government when it came to the climate change talks. This is quite an important individual in the sense that she'll help to steer Sasol to being a greener company. Your thoughts on this and how you think Sasol can transition going forward?
Yeah, so obviously leadership it's incredibly important, and there's a huge debate around the kind of impact that a chairperson can have on a company like Sasol, and whether or not this is paying lip service to their environmental targets. So Sasol has a target to reduce greenhouse gas emissions by 30% by 2030, and to essentially be net zero by 2050, which are incredibly ambitious targets. Looking at it, absolutely, Muriel Dube does come with, incredibly high environmental credentials. But I think the question in the South African economy is how much change can she really affect, given the energy crisis that we're still reeling from, and given the developmental goals that we have as well. In a country like South Africa, it's a lot more difficult to achieve environmental objectives when you have real issues on the ground in terms of growth, in terms of energy security, etc. So I think she's got a difficult job cut out for her, but hopefully her inclusion on the board and under her leadership, we can see Sasol moving towards a greener future.
Yeah, we wait and see. Gary, thank you so much for your insights as always. Gary Boyson, he's a portfolio manager at Rand Swiss.